Hey, everybody. Welcome to the Practical Founders Podcast, where every week we hear an amazing story from a serious founder who built a valuable software company and did it without big funding. I'm your host, Greg Head, and this week my guest is Dan Balcauski, the principal consultant at his consulting firm, Product Tranquility. Dan is a SaaS pricing expert. So in today's expert episode, we're talking SaaS pricing and not the simple stuff or universal truths or bumper sticker tweets that you hear about SaaS pricing. SaaS pricing is almost always more complex when we start poking at it, connected to everything in our business, our positioning, our strategies, our ICPs, and our future growth rates. But it's so important. So Dan has worked with dozens of software companies unraveling and retooling their SaaS pricing and working with their team. So he's going to talk about what's working, common mistakes, and how things are connected and how SaaS founders can be improving their SaaS pricing. It's a great episode, and Dan has some really useful thoughts for SaaS founders. And we're live with Dan Balcauski of Product Tranquility. He's the founder and principal consultant. So he's the guy that answers and helps companies with pricing questions in the SaaS world. Welcome to the Practical Founders Podcast, Dan.
I'm very excited to be here, Greg.
Another Monday in Texas. You and I are both in Texas. We're talking SaaS pricing. We're very excited about it. You know, if you've been around long enough and if your companies grow up big enough, you know that pricing is one of the biggest levers that SaaS companies have. And it's one of the more complicated areas. A lot of myths and mystery and complexity and politics and arm wrestling and everything to get your pricing right. So look forward to a discussion about what you're seeing out there with SaaS pricing. Dan, tell us about what you do these days and the kinds of companies you help, and we'll continue the conversation from there.
Yeah, well, Greg, appreciate the introduction and really excited for our conversation today. I hope we make it very valuable for our listeners. As you said very well in your introduction, I run a consulting firm called Product Tranquility. We help B2B SaaS CEOs define pricing and packaging for both new and existing products. And we find that companies come to us for a myriad of reasons. Very rarely kind of the, hey, we're thinking about doing a 5-10% price increase. If that's the question on your mind, I don't think you're hiring a firm like mine. I would just say, go do it and see what happens. And I can give some tips if folks want to go do that, right? If we want to get there in this podcast. But what tends to happen is that as companies grow and scale, their offer gets more complicated. They start moving beyond maybe their initial target market segment. All of a sudden, the value that they were selling to one target doesn't make sense, and value and price are heavily aligned. So they grow either organically through new product development capabilities, or oftentimes what's a trigger for folks to reach out is inorganic growth. Maybe they acquire another firm or get merged with another firm, and all of a sudden you got the go-to-market team's head spinning because you've got two entirely different pricing models, and they've got to sort of rationalize it and make it make sense. As you're trying to bring cross-sell, upsell into deals, you don't want that conversation to become extremely convoluted. So that could be another reason. Or you have things like 50-year high inflation and things, so it's usually some more structural thing that causes companies to reach out. But that's all I do all day, every day, is help B2B SaaS CEOs with pricing and packaging.
So you say CEOs, not product marketing leaders or sales leaders or somebody in the organization. Why do you say that, Dan?
Very good catch. I wish I could say something more downstream from the CEO. What I have found is that pricing and packaging affects everyone, and therefore the CEO really has to be on board. And it usually is a CEO / board level decision of like, this needs to change, because as soon as you start getting in the weeds, you realize the cross-departmental impact it will have. And much like product management, where often the job of a product manager is to minimize how much disappointment you spread around the organization, a pricing change can feel often the same way,
right?
Where marketing has a certain point of view of the way they want it to go, sales has a certain point of view, customer success has a certain point of view, finance. And so it's going to affect everyone around the table. And so really the CEO has to be the primary stakeholder, even though all of those people really need to come together because they're all going to be important stakeholders in the process. It makes for, as you mentioned in your intro, there could be a lot of throwing elbows, a lot of politics involved, for better or worse, but all in service of getting to a better answer for customers and for the business.
Yeah, so that's interesting. And if you say CEOs and you're talking about departments, you're generally talking about the larger companies you serve, maybe 10 million ARR or 20 million ARR or more, where those complexities are multi-million dollar problems, in the corner of pricing, something like that. Or do you work with pre-product market fit and getting to 10 million type SaaS companies?
Yeah, it's a good question. So I love working with companies of all sizes. I will say that most clients that we end up working with tend to be at least 20 million in revenue,
Yeah.
and that's not because I don't like working with startups, et cetera. But the problem is that they have bigger issues, bigger problems to solve that
Yeah.
aren't pricing. So, often if you're kind of sub 20 million, and we can get in more detail later if it's interesting to pursue, but it's like your pricing just has to not be terrible. I used to be head of product at a startup, and the CEO used to have a phrase I think is very applicable here, which is saying like running a startup is like being in a knife fight in a burning building and you also have cancer. All three are going to kill you. You just have to deal with them in the right order. And so for better or worse, sub 20 million never or rarely rises to the level of the knife fight. They're usually
Yeah.
dealing with something else like validating, the product market fit, finding who their customer is, repeatable distribution to those customers, et cetera. And pricing just has to not be in the way so terrible that it's, impeding those other goals.
Yes. I call that the unsuck playbook, right? If it just has to not suck, to get you through it, which, startups are kind of that way. So we're talking to mostly under 10 million ARR SaaS startups, getting on the field, growing and so forth. So we'll try to figure out some of those lessons that are useful that you're figuring out there. You started as or at least studied engineering, computer science, and got a business degree and played that product management, product marketing game inside a few companies where these kind of decisions get made. What is it about the pricing puzzle that makes you want to focus on it and help companies solve it? It can be a wicked problem.
Yeah, well, it's as I was telling somebody else the other day, it's a lot of mistakes mixed with opportunity. So no, I've been in software my entire career, as you pointed out. I had sort of the intellectual groundings in pricing from my business school program. I was very lucky. I didn't realize till much later that a lot of business schools didn't even have pricing courses. It's not sort of commonly taught. And I talked to a lot of product marketing people or product managers who were like, I took a product management course or a product marketing course, and they said I was responsible for pricing, but they never actually said how to do it. Right. So I feel very lucky in that regard. And then I had the opportunity during my internship when I was in my MBA program. I had an internship out with a very successful Silicon Valley startup. One of the questions on the CEO's desk was, hey, should we do a freemium approach? And they're like, hey, this guy looks like he could help us solve it. So I looked at that among several different things that summer. And so kind of got thrown into the real world of pricing there. And then you're right. I went off into more of a product management world, which, price and value highly connected. Usually product marketing owns the price,
Yes.
which is what I found when I was in industry. And I generally, that would be my advice to folks if they're wondering, who should be responsible for it. I think product marketing makes a lot of sense.
Yep.
But I had the same conversations with those product marketers where they're like, hey, the CEO is asking me to do this pricing thing, and I have no idea. Like, you went to business school. Can you help me figure this out? And so, got a lot of scar tissue along the way, trying to apply some pricing methods that maybe weren't suitable in that moment. But, over time, like I said, was in a bunch of different these product management roles, seeing how different products, different companies were doing this and got my sense there. And then, went off on my own about 5 years ago now, and just realized that this was a big area that a lot of companies were struggling with. And so, if among, a product manager is in many ways a general manager, you're sort of, the CEO can yell at you for anything. It's a good job description for the product manager. And so, among many things I had in my toolkit, this was one of them, and just realized that, this was a lot of area that companies struggle with. And so decided to focus on it.
Awesome. How many companies have you worked with? How many SaaS companies?
I don't have a tally on my board. It's in the tens, not the hundreds yet.
Okay, great. Well, and each one is different here. So isn't it funny, Dan, that SaaS pricing We don't normally spend a lot of time about it. Nobody CEO calls me and says, "I everything else is working except my pricing." Right? I've never heard that one before, and it's usually not the only thing that I could recommend to somebody. But pricing in the mature SaaS industry is still kind of a mysterious black box, right? We need to fix our pricing, somebody says, and there isn't a logical, systematic playbook necessarily. There's a lot more art to the science, or it's not quite obvious what to do there. So, is it moving from art to science these days, or are we still somewhere in between?
I think that the black box magic voodoo angle is overplayed in the pricing world.
Okay,
I
there
think
we
it
go. Yeah.
is.
I guess
There's a
that's why you
lot.
have a job. You show up with
Yes,
tools, and yes, yeah.
there is a lot more science than I think people give it credit for. There is still an art form, right?
Yeah.
As you're dealing with things like customers' perception of value, like
Yeah.
psychological
Mhm.
measurements are very, can be squishy. And I don't know there's a way to turn them into, the precision that maybe a physicist would require.
Yeah. Mhm.
But I think we've come a long way. And there's definitely, depending upon the area that we talk about today, there's definitely tools that we can bring to bear that make it, very logical and help you think through the right things.
Well, I can imagine you come into a little bit larger organization that has dozens of salespeople and marketers and coders and CEOs and boards and investors and all that stuff, where they're saying our pricing sucks, and everybody's got a different view of the game, right? The sales
Hmm.
team wants this, and somebody heard about this latest thing, and they want that, and marketers want this, and so I imagine a lot of what you do is create enough process and logic through it that you can an organization can make a decision and then align around it and then sell themselves on that. So if everybody sees it in a different way and they can't make a decision and then nobody agrees, it's not going to be successful anyway. So I'm sure a lot of that, organizational work is part of what you do.
Yeah, well, there's a lot of just helping folks to get a sense of what is available. I think this is something that overall the pricing industry, like people who are professional pricers, uh, we've actually, I'll put myself in this bucket. We've done a poor job of really giving the rest of the world consistent terminology to talk
Yes.
about things.
It's like
And
marketers
so
in general with brand. The brand of brand is different to everybody. So,
Exactly. So a lot of that is, helping to really differentiate the different components of things like packaging and
mhm.
breaking those into, okay, well, there's something that's your pricing metric versus your offer configuration versus your pricing fence versus your pricing model. Those, because most people, when we get on a conversation like this, or, first time I talk with a executive, right, they're thinking about pricing, they're really only thinking about the number, and the number is interesting, but I think honestly, it's the least important, and uh, so I want to make sure that, folks really understand that it's a lot of, when I talk about pricing, I'm always talking about pricing and packaging. I
Yes.
often just say just pricing because it gets very awkward to constantly pricing and packaging
Yeah, yeah,
over and over again.
yeah.
But yeah, it's about giving those tools so that we can look how these fundamental building blocks can be combined in ways to solve a particular problem, right? It's like, if your founders are very technical coders, right? You can imagine that, there are different libraries and pieces of code, and you could put them together to create any kind of software you want. Very similarly in the pricing world, we have fundamental Lego building blocks, and one company's pricing and packaging might look completely different than the others. But when we look at it and break it down as component parts, say, okay, here's what they're doing on, their pricing metric, and they're combining with this pricing model, and that's why this looks new and different, right? And so it's giving the people a better way to think through those componentized parts and really break the problem down in an approachable way.
What are some of those fundamental building blocks that would be useful to early stage SaaS founders out there who are thinking about pricing? And everybody knows there's probably a little problem with their pricing. Is that enough to make a change? And do we know what the answer is? Probably not. But what are the building blocks? You mentioned value, and differentiated value is one of the things. By the way, you just touch pricing and then you immediately have to go out to product and value and customers and competition and all the rest of those things. So a great strategic lever. It depends. Talk about some of the building blocks that, of SaaS pricing.
Yeah, for sure. So, when companies try to set prices for their software, I see they often face like four big problems. So they don't understand who their customers are. They don't
Yeah.
understand how their product helps customers. They can't explain why their product is special. They forget that pricing is more than just picking a number. So to help those problems, I developed something called the services model. SVCS stands for Segments, Value, Competition, and Strategy. So let's break it down. So you got to understand your customer segments first,
Mhm.
because the context your customer's in is critical, because that
Mhm.
dictates the constraints they're facing and the value they get out of a particular solution. And so, each of those segments may rank order different value drivers differently, which will cause them to value your product differently. And in the third part, we think through competition. So different segments have different competitive alternatives available to them. Like, quickly answer, like, what would your competition, or what would your customers use if your product or company didn't exist? So, and those first three elements can be considered inputs to the overall pricing process, because really your pricing power comes from, as you already mentioned, your differentiated value that
Mm.
you create for a particular customer segment beyond sort of what the competitive alternatives are available. So those elements filter down into strategy, and strategy I use in the Michael Porter sense of the word. So strategy is about trade-offs. Many companies would like to be everything to everyone, but we have to decide, like, which customer segments will we serve? Where are we best suited to play and win? Like, who are we going to target? How do we position ourselves in those customers' mind to clarify our differentiated value? And then how do we make all those necessary trade-offs to among different elements of SaaS packaging that I mentioned before, like price metric, price model, offer configurations, to really make that clear and apparent to our customers. So those are the inputs. And obviously at the end of that, we got to tack on a price level, which is the number we set to help us achieve our business objectives. But that's at the end of a very long process. And so it's really a lot of those front end sort of inputs of really understanding your customer segments of value, your competitive differentiated value, and then what are those fundamental aspects of packaging. Those are the things that I really see customers, my clients, get wrong, and that are going to be much more impactful than the price level.
Well, you hit on a big one for those early stage founders, and I know they recognize this. And you say, is this a great pricing? And you would say, it depends. Who exactly is the segment you're targeting? Is it the mid market, or the lower mid market, or the small business, or the home user, or enterprise, and the 17 levels of everything? And they say, we're going for all of them. Right.
Mm-hmm.
This is the classic. I don't want to make a trade off. And the more sales oriented a CEO is, the less they want to not sell somebody, right, and say no. But is that one of the levers, like the deep therapy strategies you have to deal with, is pick a lane so we can see if we're doing the speed limit, optimally?
Yeah, I mean, I think it's that's a critical strategic problem, is we want to be everything to everyone.
Yeah.
I don't think that you can really be successful in that
Yes.
mindset. It makes it very difficult to do a rigorous pricing and packaging approach. Now, that doesn't mean I would say two things. One is, I think there's very rational concerns about prematurely constraining your market. And
Yeah.
I think this is some of the
Yeah.
wandering in the desert that early
Yes.
stage companies have to
Yep.
do, because they
Yeah.
just don't know, and they need to
Startup.
go test things out, right? And that's the whole joy of startup, is like, oh, we thought this customer was good, but actually they're bad for all these reasons. We're going to try over here. And there's some amount of research you can do, but some of it is just, we're going to go try and land on our face there. So this goes back to one of the original points we were talking about before, which is, well, what size are my clients, right? Because some of that they've got to sort of sort through before,
Yeah.
they're like, well, we don't know who our customers is. It's gonna be really hard for me to help them. But yes, I think there's probably a couple of things though we could talk to that allow them to approach that in a more rational, structured way. So the first is, you mentioned, well, if they're sales oriented and they really want to sell everyone, it's like, no sales guy ever met a lead he didn't think was good, right?
Yeah.
So
Unless they got it from marketing. So yes. Right.
yes, unless they got it from marketing. Love it. So I think there's probably a some amount of solace to be said, is like, hey, who you define as your target market those aren't the only people you ever have to sell to, right? But it does help create focus in the organization, because otherwise you're too little wood behind too few arrows kind of thing, right? It's like we're just spread our energy too wide, and so we're not making an impact with anyone, right? Which is sort of the undifferentiated blah you don't want to be associated with, because you're not making anyone delighted, and that's a really hard place to be. Like everyone's sort of like, it's okay. It's not good. So I think that's probably one area. And then I think the other area is, there are ways that we can think about those elements of pricing and packaging that I outlined earlier in order to target multiple kinds of customers. And so when we think about customer or pricing differentiation, we could use things like a pricing metric. So pricing metric is, how do I charge for what I'm selling? So is that per API call, per seat, per gigabyte of data transferred or stored? Per user, right? And if I choose that correctly, that, and there's a longer way I could elaborate on this, but just kind of briefly, does it scale with the kind of value that customers receive? Does it scale with my costs to serve? Is it relatively easy for both me and the customer to exert some control over? As me as the vendor, can I monitor it and enforce it? As the customer, can they control how much they use of it? Right? If I find something like that, I can serve really large customers, really small customers, and have that faith that pricing metric is going to scale with those different use cases. The other major way that we think about breaking this up is in terms of offer configurations. So offer configurations, sometimes termed bundles. In a lot of B2B SaaS, we see like good, better, best type offerings. And I could talk, there's good and bad examples, but you'll see a lot of companies who are like SMB, mid-market enterprise as their different tiers or offer configurations. And so those different groupings of features and capabilities allow them to speak different value propositions, different use cases that they address to different types of customers. So those are ways that, we can sort of chip away at that problem without, having absolute precision. And I think as well, I will say that, like, I have dealt with companies of many different scales, and this is a constant journey. So I think it would be a fallacy to say that, these companies that are 200 million in revenue, they know exactly who their customer is and their different customer segments they're going after. And it's just not true in my experience. It's a journey of exploration for everyone. I don't know what the sweet spot is where a company absolutely has nailed it, but I have not quite seen it yet in my practice.
Well, in my experience, Dan, big companies have middle managers who came in late, not the founder who knew the first 500 customers personally. There's a stage in between a couple million and maybe 10 million where everybody can kind of see everything still. A $100 million company, nobody can see everything, all the way to customers and data and experience and so forth. So it's a lot more savvy and a lot less politics in the early stage companies. That's why startups can maneuver so quickly. You talked about a couple mistakes there, trying to go after too many segments where your pricing breaks, or you're the worst of both worlds in some case, and choosing a SaaS a value metric, which may or may not be useful as startups experiment with that. What other mistakes, I guess you'd say, around SaaS pricing, or what other ways can founders know if their pricing sucks these days?
Yeah, well, those are two very different and meaty questions on their own right. So I'll take one first, and then we could pivot to the other. So I think I've already said this in other words, but I would say, look, when it comes to SaaS pricing, most executive teams think that what you charge determines your success. In fact, who and how you charge determines your success.
Who and how.
So who are we going after? And then what are those elements of packaging that I just described, right? So I would spend most of my time on what the price tag goes on and little time on what number goes on the price tag. I think way too much time is spent worrying about that number. If that number is not attached to the right offer, to the right pricing model, to the right pricing metric, it's the wrong energy. So that's one mistake, and that's a whole area we could explore. I think this other one is probably insidious and not really discussed as much. And so that's like, you don't really have a choice of whether you will have a pricing conversation with your customer. The only decision you get to make is when you will have that conversation. I see a lot of pushback around, and from very good like researchers, that we can't have conversations with customers about pricing. And they're like, oh, we're not going to get good data. We're not going to get good information. And that's just wrong.
In a research process, you can't go call a customer and say, is this a high price? Is this a low price?
There are better and worse ways to answer that question or ask that question. Let's just say that objection was raised 60 years ago, and there's been a stream of academic and commercial research that has tried to get better and better at getting us good data to do that in a systematic way. And I think what you were asking me before about like, is it art? Is it just science? I think this is an area where people still have this view that like, oh, it's just, you just kind of put something out there and see what they do, right? Or go from the gut. And I think there's a real dichotomy of, well, look, if I can't, it's like Heisenberg uncertainty principle applied to pricing. It's like, if I can't get absolute 100% precision on what this number should be, well, then we're just going to use with what I feel. And it's like, I'm like, wait, there's a large spectrum.
I've made that argument before.
Well, there's a good one, right? It's like, was it Jim Barksdale? Like, if we, do you have data? Because if not, we're going with my opinion. I think I'm butchering the quote, but there's a large spectrum between my emotions and 100% absolute precision. So I think that we could, and so why do I say that? Is because I think, a lot of folks are afraid to sort of have that conversation, but put it in the extreme case, which I see way too often, which is like the absolute extreme case is we launch this thing and then the poor sales guy's on the phone. He eventually has to tell the customer what it's priced at. So you want that to be the first pricing conversation you have is when the guy's on the phone. It's like, I don't know, this number, or, what tends to be more common is we spend all these millions of dollars developing this product, and then it's like 30 days to launch, and somebody's going to be like, well, we got to price it now. And my sense is always like, wait, nobody asked before? Like, you spent all this money, and like, then you called me and be like, hey, now we got 30 days, we're going to launch, we're going to price a package. Like, like nobody, like, no, we just didn't think of it. We're like, because customers said they wanted it. And it's like, okay, well, asking willingness to pay questions the right way could be a measure of desire, right? It's like how much you're willing to fork over your hard-earned money could be a way to say how much I want it versus customers just said, oh, I really need this thing. Oh, do you need it for $10? Do you need it for $1 million? Those are two very different parts of your brain.
That's a great startup challenge, right? As you're getting going and you're creating the value, you're testing the value, you're asking about the value, trying to create more value to create, better pricing within that value for that segment. What are some questions? And I'm sure that's part of your research process, doing win-loss analysis on what deals were closed and what were not, and calling customers and researching. Besides the competitive analysis, what questions can founders ask a prospect or a customer about the value they're getting and the price relative to that value? Can you help pantomime some of the questions there so founders can get more out of their,
This is a
monetization out of the value they're creating?
Yeah, this is a deep question, so I'll try to give.
There are no shallow questions here, apparently. So, yeah,
I will try to not overwhelm folks. I would give a recommendation on a book. There's a book called Monetizing Innovation by the folks at Simon Kucher Partners, and they're sort of world-class pricing folks, and they put out a really accessible intro to pricing book called Monetizing Innovation. I probably
Monetizing Innovation. Thanks, Dan.
Either the first or second book, and they have a whole chapter that sort of outlines some of the stuff I'm about to go over. But so first off, there's this I think there's this idea that we got taught in sort of Econ 101 classes that you as a marketer just sort of set your price by placing it at the intersection of a demand curve where marginal revenue equals marginal cost. That doesn't really work, right? So this whole idea of this concept of elasticity that maybe you were taught, especially in B2B markets, elasticity is a lot like the Sasquatch. Everyone's heard of him, but very few have seen them in the wild. So you will not hear me go into a long discussion about elasticity because it tends to be a big red herring in the type of markets that I play in, and why is that, et cetera, is a longer conversation. But look, at the core of this, we always want to be listening to our customers, to our market, trying to understand how our products help them achieve their outcomes. So I want to really have a conversation, like framing it as a value conversation. I use a lot of what you might, I didn't invent this framework, but I leverage it extensively. Jobs to be done.
Yep.
Jobs to be done has many fathers: Clayton Christensen, Bob Mesta, Tony Ulwick, all the way back to Ted Levitt back in the 60s. And really, it brings together a lot of understandings of value that I hinted at earlier, which is jobs to be done really helps us understand what the context that a customer is in, what their constraints are, what other alternatives are available to them. So like, let me use a quick example to sort of illustrate like what we're trying to figure out. It's a little toy example, but how much you value and as a proxy of value, how much you're willing to pay. I use those terms very explicitly, but how much you're willing to pay or how much you value water is going to be different if you're on a road trip and stop at a gas station versus if you've been wandering in the Mojave for the last week.
Yeah.
Right. So I'm trying to really understand in my conversation with this end user, this potential buyer, like what is the situation? Like what is the dynamic around them, and really trying to understand like what have they tried before? What hasn't worked? Why not? Really going into depth on trying to understand what that full context is, because that's really going to give me a sense of, okay, now as we go into, okay, so if you solve that problem, like you've been having all these situations, right? You're a marketer and you're trying to drive more leads, or you're on the plant floor and you're trying to drive efficiency in your manufacturing line. Like if you had this problem solved that we've been talking about, like what would that do for your business? Like, okay, so you get rid of that bottleneck, you are able to, run, 10x the amount of marketing campaigns you're running on a monthly basis. Like what would that do? Okay. In terms of revenue, in terms of profit, in terms of also, you want to think about emotional impacts. Like what would that do to your career as the leader? You'd be able to hit your numbers, et cetera. So I want to think through those. And then and I'm really short circuiting the entire value conversation. I can then shift into a pricing conversation. And then, so I may use what is called the Van Westendorp price sensitivity meter. So Van Westendorp was a Dutch economist. I didn't name, all of these have weird names, but Dutch economist in the 70s. And so it's very commonly applied. So Van Westendorp methodology is 4 questions. 1, at what price would this product be so cheap or too cheap such that you would question its quality? At what price would this product be considered a bargain and you'd definitely buy it? At what price would you consider this product to be getting expensive and you'd buy it? At what price would this product be prohibitively expensive such that you wouldn't buy it? Why is that better than just saying, what would you pay for this? Because what we're getting there is explicit definitions of a range when we ask the question. When I ask you, hey, Greg, how much do you want to pay for your this coffee cup? And you say, I don't know, Dan, it looks like a fine coffee cup, $2. I don't know if you're saying in your mind that that's like a cheap price, an expensive price, a price that would like somebody else might pay that, but I wouldn't never pay that. Yeah. So those concrete framings help me get a better sense of how you're answering that question. I will also say that during that interview process, the most important thing is for each of those questions, why? You said $2. Why? Well, because XYZ, they're going to tell you some story. They're going to reveal some context. They're going to tell you some mental model about what they're thinking about when they're thinking about pricing your product. And that is absolute gold. Now, so that's a value pricing conversation, and then you can do the same thing in the more quantitative methods. So you can go do pricing surveys that either use that same methodology, and there's other methodologies as well. But that's really like a really good place to start.
So I can
And
imagine,
I would,
Dan, founders having this conversations as they're almost, startups are co-creating, right? Finding problems, helping customers literally define the problem. It's kind of a sales conversation. That's, problem, solution, impact, return, payoff kind of thing. But, they should be chasing the value, right? See, understand the total context of the value, the impact that's getting created for that segment, and pricing according to the buyer's perception of value. Create more value, create more perception of value, you can raise your prices, create a higher price. Is that a law of nature, if we're going to call one in SaaS pricing, that we follow? The first rule is to try to follow value, and then we check with competition, or you know.
it's yeah. In terms of laws of nature, I don't know if I've ever phrased it that way. It's interesting. I'll have to think about that. Look, I would say I would always keep in mind trying to balance four different things. So your costs, competitors, customer value, and customer willingness to pay. So how we usually think about this in the pricing world is there's generally thought of as three pricing orientations. So those are generally cost-based pricing, competition-based pricing, customer value-based pricing, often just shortened to value-based pricing, but we wouldn't have our three C's. Marketers, we love our handy acronyms. So the way I think about those is sort of a ladder or a journey. And so I think one area, is going back to this particular audience and how, it's a little bit earlier stage, I think you'll hear in the pricing world a little, maybe too much animosity thrown the way of cost-based pricing. It's like, oh, that's the devil. We should never worry about our costs.
Yeah. Value-based pricing is the only way to
pricing,
go.
Only way.
Yeah.
Actually, I don't subscribe to that. One is because doing true value-based pricing is really hard.
Okay.
It takes a large amount of maturity in your pricing and go-to-market organization. There's very few companies that do a pure value-based pricing approach. I think, I would say I think the latest numbers I saw were somewhere in like less than 20% of like the S&P 500, for example, do like true value-based pricing. Now, that doesn't mean we get to completely ignore it if we don't want to, go that direction. But I think earlier stage, like I want to focus on creating, communicating, and delivering value. I want to understand what the impact is that I'm making. I want to make sure that I'm charging something to validate willingness to pay and customers' perception of my product. I think one of, really early stage mistake that I completely disagree with and would ward people off is just like, well, we're just going to give our product away because I just don't think that's a good idea because look, the value is the pleasure and the price is the pain. And without the pain, you don't get validated market signal. So I would charge something to make sure that you're getting some amount of validation and you can, make sure that you're testing and learning. But also going back to what I was saying before with that orientation, the cost plus pricing, like you go out of business real quick if you're, selling $20 bills for $10. It's so there is an element to make sure that you're covering your bets. Now we're lucky generally in the software world, our marginal cost of goods is really small. Yay. But I think I think folks maybe take that a little bit too far, right? Because we got to think of all the money we're spending on incremental customer acquisition costs, incremental support spend, right? It can get real easy to be like, oh, well, the marginal cost of compute in AWS or storage in AWS is very small, but we can't take that too far. And so I think that's, as we progress, right, it helps us to keep an eye on all three, but at different stages of the journey, you're going to start building in more systems to take in information around both your costs, because costs are, you're going to get a bill from AWS, right? That's pretty easy. You're going to get a bill. Mm-hmm. You're going to know how much you're spending on your marketing, right? Those are the easiest to consume. As you grow, as you get into competitive deal scenarios, right? You're going to get a better sense of like who you're up against, right? It's going to give you better competitive insight, and that's completely separate from even running very explicit competitive intel programs.
Yeah.
And then, eventually over time, it's really hard to do true value-based pricing when you have a net new product because no one's actually used it yet, right? So you have no real case study to say, like we have hypotheses of value that we create, but we really don't know. But that doesn't prevent you again from,
That's a whole startup strategy right there, is selling into the hypotheses of value.
Well, and look, some people are willing to go on that journey as long as they get enough big enough risk discount to go along that journey with you, and it could work out well for both folks if both folks are getting equal size of the transaction. We live in a capitalist society, so transactions don't happen at the point of a gun. So both sides got to be getting something in order to proceed.
Yeah. So are you working with bootstrap SaaS companies, VC-funded SaaS companies, private equity-backed SaaS companies? We hear about the private equity playbook, one of which is fixed pricing, raise prices, hurry up and do that. What kind of companies are you working for? And maybe are there different flavors when you're bootstrap, VC-funded, or private equity-backed?
Yeah. It's hard to, separate, is it sample and noise versus and signal. I will say it tends to be a lot of private equity backed with an intermixing of bootstrap.
Yeah.
For I can't say rhyme or reason exactly why. I think one of the things that really sets the private equity firms apart is pricing and packaging changes are really defined aspects of their playbook when they acquire companies.
Correct.
And my, hypothesis around this is because there's a couple things we hit at before. There's a little too much sense of this is just voodoo, black magic. And so, it ain't broke, we're not gonna fix it, or there's no science to it anyway. Or, if there's a founder who's been there and personally shook hands with each of the first 500 customers, there's a large emotional barrier to, oh my God, if I tell them I'm raising prices 20%, they're all going to think less of me. And I built these relationships over so many years. And the PE guys are very good with coming in and saying, we ran the numbers. Actually, it makes total sense to double everyone's prices. And they do that. And they're like, yeah, we saw like 3% of the customers leave after we doubled all their prices. And so, their value creation plans, definitely have a significant emphasis on pricing. And so, I can't say whether or not that's impacted my particular sample or not, but I think that might be a distinction of way people look at it.
Well, bootstrap companies care about pricing because customer funding is their funding. Their revenues is their funding. Private equity backed know that they don't have a lot of levers to go splash cash at throwing at people and marketing and sales people out there. So pricing is another lever. And if you've got an installed base and you can raise revenues 20% in 1 year, it all goes to the bottom line. Venture funded companies are in a different kind of race. Maybe they've convinced it's more art than science. Maybe it's newfangled categories, so there isn't a lot of data yet. It's just more of a race. So that makes sense to me that bootstrapped and private equity would have a lot more thoughtful pricing discussions and so forth. A founder I talked to today that I work with and advise, she's got a $6 million headed to over $10 million SaaS business this year, and she's in the process of raising prices on the editions, creating a new edition for the first time of her pricing, and we talked through all of that, and so. Including the impact of it. And even at a modest impact, it's, really funds her growth, bootstrap software company. So it's really quite amazing how the impact that pricing can have on the business. Do you ever talk about or work on what pricing does as part of the positioning, the brand of a company? I think pricing in the classic story is pricing in wine. The more expensive wine we equate with its better wine, or at least it used to be that way. And there's premium pricing around the Apple iPhone that if they made a cheap version, we would think it were cheap. Do you worry about those kind of outside perceptions and let's say the brand or the market position when you think about pricing, or are you further down to the tactical execution?
Yeah, no, it's a great question. And good luck to your founder. I hope she is very successful with her price raise. So the positioning. So we're going back to part of earlier in our conversation, we were talking about product marketing, owning pricing. One of my arguments for that is because usually product marketing owns the positioning within the organization. And pricing is a function of your positioning.
Right.
And so
Yes.
I believe that those two married in the same person or department makes a lot of sense as they're so closely interrelated. That said, one thing that I think is probably not talked about a lot is, and this I think will be very helpful for your early stage companies, is this idea of price positioning. So, I'm a big fan of what's usually thought of as positioning of like, what is who you're going to be compared to, what is the features that differentiate you, how does that create differentiated benefits, what type of customer is that going after, right? All the things in the standard Trout positioning statement. But price positioning is mysteriously missing from that. And so what is price positioning? So price positioning is a strategic exercise that we do early in the process. I would compare it against what we were talking about earlier. So like the idea of these Van Westendorp type questions where I'm having very tactical sort of willingness to pay questions. This price positioning is upstream of that. So what do I mean? So like when we think about price positioning, it's really this idea that the general price point I select for my type of product is going to invite competitive comparisons.
Correct.
So one example, or we could use that could be relatable for folks, is the idea of like the auto market, where I might have a Toyota Camry that's in this average sort of market player. I'm going to be compared to the Honda Accord or maybe the Tesla Model 3. And, maybe, there's going to be a bunch of other cars in that category. But if I'm, the Tesla Model S, I'm going to be compared against, the $80,000 to $100,000 BMWs and Mercedes Benz and other, those premium providers. And then there's the ultra luxury segment where maybe I'm a Tesla Roadster and the Ferrari and the Lamborghini and the Bugatti. So each of those are cars, but by definition of their pricing, they have invited, like nobody's shopping simultaneously for a Toyota Camry and a Lamborghini. Like I just don't think that exists, right? Because they're in sort of different markets.
And what you're saying is it's not because necessarily the features of those cars, it's the price level. You've set a price and you're going to shop that price category.
Well, and there's very explicit decisions. If you go back to, I think it's 2008, maybe it's somewhere between 06 and 08. Elon Musk, it's still up. He wrote a very good blog post called, it's like my secret plan to take over the world. And it's about Tesla. And he describes his plan in, this is again, 10, 12, 14 years ago, something like that. He's like, we're going to come out with the Tesla Roadster. It's going to be premium priced. It's going to invite comparisons to these cars. It's going to have this amount of volume that we're selling. Then we're going to come out with the Tesla Model S. They didn't have the model numbers and names defined yet, but then we're coming out with the S, and then we're going to come out with the 3. And he basically did that plan because that allowed them to get. So what? Why would you do that? Because if I'm selling ultra premium with the Tesla Roadster, which I think is like a $200,000 plus car, what are the features those folks care about? We'll tell you what they don't care about. They don't care about, is there a nationwide charging station for me and my family to do a road trip so that we won't get stranded in West Texas because we're too far between charging stations? The people buying the Roadster are not using that as a buying criteria. Also, Musk is able to say, look, our operations we don't know how to build cars. I mean, I'm smart. I could probably figure it out, but it's going to take some time. I want to try a whole new way of building cars. I don't want to try and build a, 100,000 to 500,000 units a year factory off the bat. Like I want to sell something that we need to run 100 to 1,000 units off the factory line. That'll allow us to get better at manufacturing, get the right personnel, figure out how to actually do this. and then gradually increase those over time so that, but what does the Tesla Roadster do with its electric drivetrain? Could beat the Ferrari, the Lamborghini, the Bugatti, all my rich friends. I could beat them off the line 0 to 60 on the track on Saturday. And that's what those folks cared about. And so it's a very explicit decision. You could see the same thing happen with Southwest Airlines. Southwest Airlines came out, launched in Dallas, Texas. They made very explicit decisions of, yes, we want to compete with other airlines, but actually we're going to look at what the point-to-point, Houston to Dallas, Austin, San Antonio to Dallas, Houston to Amarillo, what the drive time is for that business customer. Like, what does that make sense where they're either comparing us against a regional bus service or driving their own car, and that we're actually competitive with theirs. So it's a very upfront strategic decision you're making in order to make the comparisons relevant that you want. And so I think it's something that we don't really think about, but it's something that is, it's a strategy decision. I don't think you could research your way into that. You just have to say, this is what this is the price. Like, I'm trying to build the prosumer SaaS tool where it's going to be swipe your credit card, but less than $1,000, between $100 and $1,000. Or I'm going, we're going big service, like 7-8 ticket Workday Palantir type, models, right? And that's not like Palantir didn't price test their way into 7-8 figure like government contracts. I mean, I'm sure they did some sort of price testing. Those are very different markets. But though I think that's an area that can be thought of very early in the positioning process. And you also try, generally, the advice there is the middle is where you get killed, where it's not it's not enough money per customer to really support sort of the high touch experience that you need, but it's also not enough to make it fully self-service, because then all the other downstream implications and operations that you have to trade off. So.
Well, and and Jeff Moore talked about the bookends of the business here, the volume side of the business, which tends to be cheaper and freer, right, to where that wins. And then there's the complex side of the SaaS business where the higher price, right, prices get higher and higher kind of thing. And that mid-market is a little sensitive in between. The free guys that, make it cheap and easy for millions, and the enterprise that, none more expensive or more powerful. So I totally appreciate that. And that Tesla story, I'll put a link to that in the show notes here. I just searched for that. That is 2016, August 2006. So 18 years ago, he said, he outlines it in a blog post, and he says at the end, so in short, the master plan is build a sports car. Number 2, use that money to build an affordable car. 3, use that money to build an even more affordable car. And while doing these, number 4, doing all of the above, provide zero emission electric power generation options, right? So don't tell anyone, he says. So that's where pricing and strategy are almost the same thing, right? To the world, it's a beacon, and you solve the business model around it. He used funding to solve around the cost model, but so that was pricing and costs, kind of finding their way together. Yeah. I'll put a link to that out there. The world of SaaS has spent about 20 years evolving, and now we find swim lanes of user-based pricing and usage-based pricing and the classic good, better, best editions and so forth. What's changing these days, either because of let's say, the SaaS recession and, spending getting reduced, AI with its different costs and its different opportunities? Is there a race to commoditization and lower prices, or what kind of things are you seeing out there that wouldn't be as obvious to somebody just starting out?
Well, the AI thing is, front and center on my radar. It's probably the most common question I get. I think, so in general, there's a race to profitability. So I think that's, very Practical, exactly. So a race to profitability kind of across the board. And so I think that's definitely a shift from maybe the growth at all costs mindset that we were in, in the 2021, 22 era. So I don't know if that's new at this point. I think that, some of the AI stuff is interesting because I see those two related, and I think folks are making a big leap when we think about the AI pricing, because folks are really worried about their they're increasing marginal costs to deliver. Because if you're adding AI capabilities in, like I said before, it's really one of the reasons I think monetization as a growth lever gets ignored is because it's really easy to count my MQLs and my SQLs and my revenue numbers. It's really easy to count my costs, both for salaries and AWS spend, and now spend to either OpenAI or Anthropic or Gemini, whoever it might be. But right, like at no point are you saying like, there's not a memo that hits the CEO's desk usually that says we're creating 100x value to price for our customers. That's usually sort of heading out the background. There's usually no line on the P&L that says yes, you got X amount of revenue, but if you charge what you should be charging,
Right.
it would be 10 times higher.
Uh-huh.
Like that doesn't show up on when the accountants are done. For better or worse, probably wouldn't want the accountants trying to figure that out anyway. But I think what happened a lot during this growth at all costs world was let's just add features and try to basically get share, get more folks in the funnel. And then, we'll worry about
more value, same price, grow faster.
Exactly.
Yeah. Make it up in volume.
Exactly. And so then what you started to see right about 22 was that, especially a lot of tech companies that sold to other tech companies, they saw this first, but then I think broadly we saw a slowdown where they kind of a lot of the companies sowed the seeds of their own demise, where they made, say you sold on a per user per seat basis, you made those people more efficient with the capabilities you delivered, but you didn't increase the monetization. Well, as soon as headcount started shifting the other way, well, all of a sudden now people are like, well, actually we can get done with more with less. Like, so they sort of sowed the seeds of their own demise at the
like
same
Salesforce.
time.
If you have 20% fewer sales and support people, then, your annual contract value goes down regardless of the per user value.
Exactly. And so that started to happen right about the exact same time as the world got taken by storm by things like ChatGPT and companies all trying to say, okay, how are we going to roll AI into our products? And so I think companies were already starting to feel this sort of rollover. And so I think one of the areas that I get asked about a lot is like, okay, does AI mean sort of per user pricing is dead? And I'm like, well, no, I think that's overblown. But companies were not having the right set of conversations to say, hey, we're creating these new capabilities. It's creating more value. How do we appropriately think about monetizing that differentiated value over time? What's become more clear is that, that started to not be there, but also got layered in this acceleration because now you have this additional variable cost that's increased. So it became much more apparent to executives who maybe weren't paying attention to that was going on, or now everyone's like, oh, well, I'm blaming it on AI. It's the end of the user-based model, where I think folks were already seeing a turnover there. So try not to make that too abstract for folks, but I think, one thing I would say, as if folks are going down this AI world, a couple of pieces of guidance: do not make the mistake that our brethren in the crypto blockchain world made, where they said, hey, this product now has blockchain in it, and all of our customers went, I don't get it. I think I see a lot of that now with AI, where it's like, hey, now we have AI in there, and now we're going to charge you some, besides maybe your per user metric, we're also going to throw in some, and that gives you 2,000 user credits tokens per month. And everyone's going to look at you and be like, what's a token? Why would I use this thing? What does it do for me? Don't show customers your underpants. Your customers don't care about your underlying costs. They are not interested in what it's costing you to pay OpenAI. All it's doing is making them very confused. So there's other ways around it. Be like, let's look at, are we increasing the value of that seat? Should we just increase the overall price for that seat, right? A naked price increase as we're adding more capabilities. It's not fully naked price increase because you're adding more value.
Yeah.
But instead of layering on these additional complex pricing metrics, there's a lot more I could say on that, but I'll stop, see where you want to go.
Well, there's we could spend a while on AI. I want to get your final thoughts here. AI, I'm seeing a lot of opportunity with AI startups, not just making people with their jobs more efficient. CRM made salespeople's jobs more efficient and more productive, presumably. and getting a proxy value for that in the per user price. But AI is doing things that services industry, which is way larger, the largest part of our economy, is doing. So there's a new anchor price for AI functionality. I used to send this to designers. Now AI, I push a button and it does it. So there's a relative price for doing the thing as opposed to the efficiency that I'm starting to see in SaaS businesses that say we not only make you more efficient, but we'll actually do more stuff for you that you used to pay for. And there's now two different price axes that they're playing with.
Mm. Sorry, was there a question?
No, I don't know.
Oh,
okay. I was just pondering that. I think that's where the biggest opportunities are right now in AI. Instead of making lawyers more efficient, doing 50% of contract administration done automatically, and cut your legal bill in half is one way to say that.
Yeah, I think well, one kind of maybe way I would flesh that out a little bit is say, I think one thing that is going on right now is I think a lot of folks are being pushed to monetize these AI capabilities slightly ahead of where they should otherwise.
That's a nice way to put it.
Because so there's, as I talked about before, there's two factors that are relevant here that I think are at play. One is customer value, and the other is costs. And so the cost is very concrete coming in on that that bill every month, and so that's activating a lot of CFOs, et cetera, to want to push things forward very fast. But the value is still unclear. I think a lot of customers still don't understand. Like they're interested. I think there's a healthy skepticism. It says, yes, this looks interesting. Yes, I could see how we could use it, but it's really hasn't been validated. And so I think folks are rushing to sort of charge for that capabilities because they're getting that bill on the inside. And so I think we're going to be in this uncomfortable position for a little bit while that shakes out. But yeah, going back to what I said, like try in the interim, I would say don't pour sand in your entire go-to-market model because you added some additional price metric that nobody understands, and every sales guy has to spend 20 minutes on every call trying to explain.
Well said. Well, that's a great piece of advice right there. Dan, we've got practical founders out there who are getting on the field with their first products and customers, getting to $1 million and figuring out that crazy product market fit, all that those trade-offs, that get you in the chute, and scaling to 5 or 10 million and imagining the multiples someday that they're happening, that they're thinking about. What advice do you have for them about how to get started with pricing and avoid some of the pitfalls and, create competitive advantage?
Yeah. So I think, one of the most healthy ways to think about pricing is price is a thing, but pricing is a process. Like any other process in your company, right? Probably want to have some sort of owner, have some sort of document, understand the first iteration that you go through is probably not going to be your best iteration, but you don't really prevent your team from answering customer support tickets until you have the perfect customer support process. Very similar with pricing. I would say you're going to make mistakes. Those mistakes will be way less fatal than you imagine they will be in your head. But as long as you're committed to improving that process over time, you're going to start moving in the right direction.
Yeah, and I've seen pricing hurt a lot of companies and really help a lot of companies. And it takes a lot more thought and thoughtfulness than people imagine. And it's so connected to everything inside and outside the building. Thanks, Dan, for sharing your thoughts on the current pricing world. How can people reach out to you, and what resources do you have available for them where they can learn more?
Yeah, well, I appreciate the time, Greg. I appreciate the time of your listeners. Happy to connect with folks on LinkedIn at Dan Balcauski. Just reach out to me. Let me know you heard on the podcast so I can separate it from all the other LinkedIn spam. Also, I try to blog fairly regularly on my website at Product Tranquility. And also, I have my own podcast called SaaS Scaling Secrets, where I interview scale-up B2B SaaS CEOs. So the idea there is, I think would be a good resource for your founders, because all the CEOs I talk to are in the 20 million plus ARR. So the idea there is we try to hear the stories, the challenges as they got from 1 million to 5 million. Hey, we thought we were kings of the world and had this part of our go to market or our culture or hiring process figured